Crypto's down. I guess the meme is true. I gotta get a job at McDonald's. I'm going broke, guys. Things are getting out of control. The whole world's like coming down. But the crazy part is even if I got a job at McDonald's, it wouldn't even offset for inflation. So in this video, I want to talk about the CPI numbers that are coming out, and just to throw it at you, the Consumer Price Index, which is a completely BS measurement of inflation, is at a high number, which is 7%. Also, we have a huge deficit with China, and it rose to $45 billion in our trade agreement, which is absolutely ridiculous. Supply chain issues are leaving new homes, remodels with long waits for windows and other things. I tried to buy a couch the other day. I couldn't even find it. So yeah, the world's crumbling, and yeah, I don't know if McDonald's could do it anymore. Keep watching. What's going on, everybody? Alex back with another video, and I want to talk about the CPI numbers that are coming out today. Okay, so this is obviously a big catalyst for everything in cryptocurrency because Bitcoin is supposed to be a hedge against monetary inflation. Now, we have this number called the Consumer Price Index, and what it's supposed to do is calculate the cost of a basket of goods in comparison to how much people are making with wages. And what does that mean? Basically, if your paycheck does not increase, but the cost of items increase, you effectively have less buying power and you cannot get more items. So you have, this amount of money and you could buy this much stuff, okay? The stuff is maybe the power of 10. And then that same amount of money buys you the power of 8 amount of stuff, right? So the whole point is that your money is being diluted right in front of your eyes. And in my personal opinion, I might be dramatic, but in my personal opinion, I think they use inflation as a way to enslave mankind. But let's not talk about that too much because I might get banned off of YouTube. If you appreciate this content, like the video, subscribe to the channel because I have a mustache and you don't, or maybe you do. And if you do have a mustache, then you can apply at fundamentalsecrets.com and jump on the team because I'm going to convince them to get mustaches eventually. If we come over here, you can see that the CPI numbers have skyrocketed. And whether that's, with the Black Swan event and everything that's going on in the world with the masks that I don't want to say on YouTube, or just, the economy in general of how they basically have treated it for the past 50 to 70 years, the money is becoming harder and harder to get items, right? So you can see, again, US CPI, this is only showing 4.5%, but the official numbers, as you can see right here, increased to 7%. Now, again, today, they are coming out with more numbers. And I want to give you guys my prediction of what I see, okay, and the reasons why I see it and what it's going to do to the cryptocurrency markets, okay, because obviously a lot of you have invested interest in the cryptocurrency markets, okay? But I do, again, want to explain it. I did kind of explain it, briefly before, but the CPI is a very, very, in my personal opinion, biased rule of measure for inflation, right? Because right here, as you can say, it's most widely used as a measure of a country's inflation rate. But it's come under fire by a lot of people. And the reason is because they utilize something called the basket of goods methodology, and they get to pick what goods go in that basket, which is ridiculous. They should just take in consideration everything. Like, for example, real estate prices are not considered in the CPI. And right now, real estate is at an all-time high. This is a good. This is something people purchase and have to pay rent. Why is it not taken in consideration, to measure if the CPI is increasing or not? I'm sure that if we used a housing market, the CPI would be much higher than what it is today. Basically, they can choose which goods are in it or not, and they can manipulate that. Also, it only takes in consideration urban consumers and does not attend to customer demographics. So it's biased by demographic type and can also lead to distortions created by these generalizations. So in general, there's been other ways that CPI has been calculated before in 1980 and 1990. And if you look at those numbers, you would see that it's much higher. Somebody in the higher up, Federal Reserve made a decision to calculate the CPI in a different way, and for a lot of reasons. And one of the big reasons was the Social Security liability. So basically, if I'm a guy and I'm like, hey, I have to pay Social Security to all these people based on the CPI number, let's lower the CPI number so I could pay less in Social Security. That's basically the decision they made in 1980 and 1990 to calculate the CPI in a different way. So if inflation shows us if our money is valuable or not, And there's a person that can control how the inflation is measured that effectively makes them control what? Our money. If they control our money, they essentially control our time, because money is just a encapsulation of your effort over time. So essentially, bringing it back to what I was saying before, they use this to enslave people. So if we come over here, you can see that the unemployment rate has been dropping, which is a very good thing. And we see Jerome Powell and a lot of these people talking about the unemployment rate and how they get this back to, these nice levels here. But we see that it's kind of bottoming out. And there could be a chance where the CPI has been lowered because of this, because a lot more people are working or whatever the case is. But I don't think that's the case at all. I mean, I think I was talking to Marty the other day, and he told me chicken rose by like 40%. We were talking to some people in some grocery stores, and they were saying that literally last month, all prices rose for food. So this is not good at all. If we also look at the 10-year government bonds, you can see the confidence in the market is lowering. So people typically buy 10-year bonds because they are confident in the US government, and they're confident they're going to get their returns for 10 years. But you could see that the rate has been increasing, showing that less people are buying. And we are coming up to this big resistance point. If it does break through, this would show more of a lack of confidence in the U.S. government, and people in general are, again, like I said, freaking out and panicking right now. The world is kind of burning. It's not just cryptocurrency. So other things to take note is that the world's kind of going towards crypto. So you can see here, Russia set to recognize crypto as a form of actual currency. We see this in multiple places. So regulation is definitely happening. Also, we saw the big 3.6 billion Bitfinex hack that the U.S. government seized. Okay, they took this money. This could be a negative or positive thing. It could be a negative thing because they could dump it on us, and it could be a positive thing if they decide to hold it on their balance sheet, which is very interesting because it happens to be that top 5 by number of crypto holders, U.S. is the number 2. There's 27 million people that hold cryptocurrency, and the top 5 countries by percentage of population, USA is number 4. So although USA is probably a little bit slower for regulation, people are adopting. Another thing I want to point out is these percentages. Look, we have 12.7%, 11.9%, Kenya is 8.5%, et cetera, et cetera. We haven't really crossed the chasm. So if you guys ever looked at this chart here, it basically shows, when we get this adoption of any new technology. And early adopters is typically about 13.5%. So if you look again at these numbers and accumulation of all these countries, we're not even in the big exponential growth curve of cryptocurrency. So we have a lot of room to go. The question is, what's going to be the catalyst that gets us over the chasm of 13.5%? I've said before in the past that we have crossed the chasm in the United States, but I think there's still a barrier for the whole entire world because of regulation or whatever the case is. And I also made a video, you can reference the video yesterday, where I talked about how Ethereum and this utility narrative can take over. It could literally push the markets up. People could start adopting NFTs and playing games in the cryptocurrency market, even though the games suck. They could start adopting this. They could start getting into DeFi because of these inflation issues, which, by the way, at the end of the video, I want to show you an easy way, even if you know nothing about crypto or have never spent any time in this market, I want to show you an easy way to kill all bank returns. So if your money's in a bank, you're losing money unnecessarily to inflation, and this will offset inflation and allow you to save your money over a long period of time, or save your time over a long period of time, and actually invest into yourself. It's very complicated stuff, but you should definitely, invest in your financial education. And then one thing I wanted to point out is obviously this event that's happening, Super Bowl, all these companies promoting crypto. There could be a sell-off event. Typically, when we have these big news events, there's sell-off. So in my personal opinion, for my prediction, with the CPI data, with the Super Bowl, we're probably going to have a short-term sell-off because the CPI numbers will probably come higher than 7%. In my personal opinion, what's happening in the world, my prediction says that we're going to have an increase in the CPI data, which will ultimately lead to the Fed having to increase interest rates so that there's less printing of the money. If there's less printing of the money, then all of the risk on assets, including cryptocurrency and stocks, will suffer because of this, right? Because, typically people buy it when it's like in a bullish type of environment. So they will suffer short term, and then ultimately people will wisen up and realize that all of their money is going to nothing because of inflation, and start moving over to crypto. So you guys know I'm long-term ultra bullish in cryptocurrency in general. but there could be a sell-off, and this is the reason why I haven't jumped back into the market just yet. I want to wait till the CPI data. I want to wait till the Super Bowl, and then maybe I might jump in. It's gonna definitely be in the next week or so. So make sure to subscribe to the channel and turn on post notifications with the little bell icon at the bottom, because I will make probably a big buy call or a big buy recommendation. This is not financial advice. You get the deal. I've told you guys I want to jump back in the market. I'm okay with cutting losses, even though I lost a little bit on this pump. You get the gist. I'm not getting emotional in my investment. So make sure you stay tuned for that. There's one more thing I wanted to show you guys. This is a chart created by Fundamental Secrets. If you guys want to get access to that, I have a link in the pinned comment below. It's my private group. But basically, it shows all the times that the Feds raised interest and all the times that they lowered interest. And the point of this, again, is when they raise interest, they are not promoting spending. Banks are going to have to pay more to get loans out, right? And then if they lower interest, then they're promoting, hey, let's print more money, right? So obviously Bitcoin was created because of the money printing, but when they raise interest rates, as you could see, the market typically drops, right? Raising interest rates is basically acknowledging that there's an inflation problem and they're trying to solve it. And every single time, look, we see a drop here every time they raise interest rates. And I do think after the CPI data, they will raise interest rates. They are actually acting on this, and a lot of people have been talking about it. So again, look, raise interest rates, drop. Raise interest rates, drop. But notice, even after it drops, we get this pump. So we're going to probably have that initial drop, but eventually it will come back. The market will come back. We have this raise interest rates, drop, right? Literally, when they raised interest rates in 2017, the market literally dropped right after that, right? And it's crazy because even if you see lowered interest rates, for some reason, we still see drops all the time. So basically, in general, any Fed movement is typically bad for markets short term. I'm talking short term. I know a lot of people are going to get butthurt because I say anything negative about the market, don't get emotional. I'm talking about these very short term spikes. And I can potentially take advantage of that by buying into it or whatever the case is. The market's already reacting to this. Now, I'm making this video on Wednesday, trying to drop it on Thursday. So you can literally see people are already jumping in to GMO JPY on Nansen, which is a smart money tab. Nansen basically tags on-chain entities on the blockchain and basically watches what they do. They consider smart money people that have made a significant amount of money. So these are people that are, probably a little bit in the know-how, a little bit more in the know-how in the cryptocurrency market. And you can see that a couple things. They're jumping into USD coins, right? So they're trying to play it safe, and they're jumping into the JPY, or the Japanese yen stablecoin that's on Coinbase, which is showing, again, an attack on the US dollar, right? Literally, we have CPI data coming out. They're all jumping into the JPY, which is really, really interesting. So yeah, this might be like I just want to show that the market's already reacting and that this event that's coming up is very important. And I want to show people that. So you can see the market reacting. If we come over here, I wanted to show you the last thing, we'll conclude this video. There's easy ways to offset inflation. You don't have to be scared. One way I do it is with Yearn Finance, but let me show you the difference. If you put your money in a bank account, the interest checking is literally 0.03%. That is a slap to your face. They are using your money to invest. You put $10,000 in a bank account. They're using that money to invest in different things, and they're paying you back 0.03%. It's ridiculous. It's ridiculous. This is the reason why Coinbase was basically, I wouldn't say banned, but they got a lot of regulation scrutiny for them trying to launch their own yield program, because they were going to offer about 5%, which is literally like almost 10,000 times better than this. They are scared. Banks are scared. They're losing their dominance. People are realizing that, 0.03% is not cutting it anymore. Savings, 0.06% is not cutting it at all. And let me show you why. If you come to Yearn Finance, you can see that the APY is absolutely ridiculous. In some cases, it's not showing it, but in some cases, 21%, okay? It's saying 0% now, but this fluctuates from 10 to 20%. In cryptocurrency, there's so many different markets where you can get easily 5 to 20%, depending on what it is. If we go to Celsius, earn 13% APY on crypto. You can literally see it right there, right? I can go earn, and we can see that it's not just on cryptocurrency, it's on stable coins as well. So you have no volatility risk, but you could definitely look, stable coins 10%, PAX 10%, right? USDT 10%. This is literally so much better. Like, do the math. 0.03% versus 10%. And the whole point I'm trying to make here is that if the consumer price index, which we just talked about, is manipulated and it's probably more than 7%, then you need to offset the cost for it, right? Dollar Tree just made a decision to charge $1.25. So their offsetting is literally 25%. They think that inflation is higher than 7%. They're making that decision by charging $1.25, right? So it's probably higher than 7%. And the new numbers that are coming out are probably going to be higher as well. So, you have to offset it somehow. If it's in a bank account, you are literally losing money as we speak. You're bleeding out slowly to inflation, hidden tax that nobody knows about. And this is why I make these videos to educate you guys. So there's so many different solutions. You can go to Celsius, you can go to Year in Finance like I did, whatever the case is, generate more than 0.06% APY, guys, and offset the cost of inflation. So it's not all scary. I provided a solution for you. If you appreciate this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. Catch you in the next one.